This is Know Your Options, when we explore the world of options with our expert guest, Thom. This is the segment of the show, the final segment, in which Chris will outline specific options trades that he's looking at right now as an options expert. Now, he mentioned Apple at the beginning of the show. We'll probably talk a bit about Apple again, but we're going to begin this segment with a Canadian stock, Spin Master. You think this one offers some opportunities from an options point of view?
Yeah, I mean, Spin Master, it's a great Canadian company, and it's been beaten up through all this tariff discussion and turmoil, and it's pushed it down to a level that we think it's good value. When I priced this out earlier, the stock was at $23. It's now closer to 22. So if you followed this, you would actually get more than what I'm saying. But earlier this morning, around the open, when the stock was $23, we were looking out to June at selling the $20 put. So that's $3 below where the stock is trading right now, and collecting 70 cents for that option. So what does that mean? It means we collect 70 cents. That's coming to us and stays with us no matter what. But we're on the hook to buy that stock at $20 if it goes below that level over the next 2 months. So 70 cents represents 3.5%. That's a very high yield and something that I'm happy to take over such a short period of time. And if it does decline below 20, our net purchase price is now going to be $19.30. This is a huge decline from where the stock was trading before. They've got good flexibility with their manufacturing. Their company, they're putting toys in the hands of children while parents are trying to keep electronics out of their hands. Yeah. This is going to be a universal thing. So this is good value at that level. And, we're not committing to buy the stock today. We're not saying, hey, this is the level that we want to get in here. We're saying if it keeps going down over the next 2 months, we will buy it. And if it doesn't get there, then we make 3.5% in a short period of time.
Okay. Costco is the next one, one of the giant retailers of the world, a company that's almost universally respected by analysts. The debate is always on the valuation on this stock. Yeah,
so Costco, it's always an expensive stock. They are a premium retailer, and they have an extremely loyal customer base. They're members, right? You pay just to get in there. So, a lot of times you're trying to maximize that value. The stock was on a really hot run and got up to, I think, about $1,080 a share, and then backed off closer to $900. It's actually up today on a day that's filled with red. So, this is a company where if in an even playing field, if everybody's getting subjected to tariffs, there's nowhere to trade down to. There's nowhere else people can go to get a better deal on these products. So, in addition to that, a lot of their U.S. business is goods that are manufactured or grown in the U.S. So with the stock trading around $970, I don't know where it is right now, but we're looking out to July, so going out 3 months, month further than last time, and collecting $27. So $27 is 3% of $900. And we've got about 10% downside protection within this stock, and really happy to own it if it gets to 900. This is one where if you're looking at that chart and you're saying, I wish I bought it last week when it was 900. If it got back to 900, I would definitely buy it. You can make that commitment right now and get paid $27 a share for doing that.
Okay. Costco, as we can see, trading at $9.84 and change. Let's go back to Apple. We talked about that at the beginning of the show. Let's go back there. It's obviously one of the most heavily followed stocks in the world.
Yeah, so Apple, I've been on here a number of times over the last year or so. And most of the time, whenever I was talking about any of these Mag 7 stocks, it was saying, if you own this, sell a call. But here we are, Apple's backed off like $1 trillion in its valuation. So we're looking at the stock right now. When I priced it out, it was $190. It's a little bit below that. So we were looking at selling the June 180 put for $9. So what does that mean? It means if the stock goes below 180, where it was just a couple of days ago, we're on the hook to buy it. Our net purchase price will be $171. So $171 is almost, other than for a few minutes where it was a little bit lower, that's the low for the last number of years. And if we look at the stock was trading at that price in 2021. So you're able to go right back in time and buy this stock where it was trading in 2021, which is about 10% below where the stock is trading right now. And at this level, these are good. This is a good valuation to enter this stock.
How has this big market decline, the tariff-related market decline, how has it changed the options landscape from your point of view as an expert? It's put a lot of stocks on sale, obviously.
Yeah, I mean, where recommendations were often, hey, this thing's trading at an all-time high, sell a call. Here we're looking at selling puts. So volatility's gone way up. Option prices are more expensive. So if you're looking to deploy some cash, sell some puts.
Chris, Thom, I want to thank you a great deal for our debut episode of Know Your Options.
Yeah, great. Thanks a lot for having me. I'll see you in a couple weeks.
And that wraps up our edition of Know Your Options. As Chris just said, we'll see you 2 weeks from today at 11 a.m. Eastern Time. That's Thursday, April 24th. Up next, Andrew Bell takes over with Morning Markets.